This is Optimal Finance Daily, episode 465, The Smart Woman's Guide to Investing Success, Part 2, by Jon Dulin with MakingSenseOfSense.com. And I'm your host and narrator here on OFD. My name is Dan, and I'm here each Monday through Friday reading to you from some of the best personal finance blogs on the planet. Now, today's post is a continuation. This is part 2 of a post we started to read yesterday, so definitely check out the Thursday episode first. If you haven't already, that's episode 464. And don't forget, we do book giveaways to random people on our mailing list, and you might want to be a part of that. So if you're not on the list yet, please come by oldpodcast.com and simply enter your email address. That's all it takes to get on that list and be part of our drawings. And I'll give you a reminder about that at the end of the show, too, with a little more information. So for now, let's hear part 2 and continue optimizing your life. The Smart Woman's Guide to Investing Success, Part 2, by Jon Dulin with MakingSenseOfSense.com. Make a plan. Another important way to avoid falling victim to your emotions and to become a successful investor is to create an investment plan. Before you invest, you sit down and write out your plan. What are your goals? Why are you investing the way you are? All of this is important because in the future, you will be reviewing your plan to make sure you're still on course. Your investment plan also helps when the market gets rough. You may be tempted to sell and run for safer investments, but by reviewing your plan, you can see what your goals are and why you are investing the way you are. It will help to keep things in perspective and keep you invested over the long term. Invest, don't trade. Studies show that men are much worse at this than women, but it needs to be said. There's a difference between investing and trading. Trading is when you are constantly buying and selling funds, trying to avoid losses and earn a higher return. Unfortunately, this rarely works. In fact, the average investor only earns 2% while the market earns 8%. Why is this? Because the average investor keeps jumping from investment to investment. And success in the stock market doesn't work like this. You need to be invested for the long term. No one can time the market and invest only when the market is rising and be out of the market when it's falling. It fluctuates every single day. Instead, just invest. Create your plan, pick a few investments, and continuously add money to these investments on a regular basis. Ignore everyone telling you the market is high or low, and just invest. Remember, your eye is focused on the long term. Choose passive investments. There are 2 types of investments out there, active investments and passive investments. I could write an entire post on this topic alone, but for now, just know that actively managed investments, mutual funds in this case, are run by a portfolio money manager who's trying to beat the market. If their fund tracks the S&P 500 index, then that is the market they are trying to earn a higher return than. On the other hand, a passive investment is a mutual fund that is simply going to match the return of the market. So which philosophy should you follow? You should choose passive investments. The fact is, no one beats the market on a consistent basis, year in and year out. Only one person has done it recently, and his name is Bill Miller of Legg Mason. The mutual fund he ran beat the market every year from 1991 to 2005, but he hasn't fared very well since. While his run was great, the odds of completing this feat are 1 in 2.3 million. On top of this, when Mr. Miller was interviewed about his streak, even he chalked it up to luck more than skill. The point is, don't bother trying to beat the market because in the long run, you can't. Just take what the market gives you and you will be fine. Investment fees. The final topic is regarding fees. As with active and passive investing, there is much to be said about this as well. When it comes to investment fees, know that you have to pay a management fee with mutual funds and exchange-traded funds. However, unlike with other things in life, you don't get what you pay for. Paying a higher management fee does not guarantee a better return. In fact, there is no correlation. You're better off paying the lowest fee possible. Luckily, this is where passive investments come into play again. Since a passive fund doesn't employ a management team to pick investments, the fees are much lower. As of this writing, the average management fee for equity mutual funds is 1.4%. This means that for every $1,000 you invest, you're paying $14 each year in fees. While it doesn't seem like much, when your investments start approaching 6 figures, the fees really add up. On the other hand, a typical passive mutual fund has a management fee of just 0.2% or $2 for every $1,000 invested. You work hard for your money. Make sure you do everything in your power to keep it. Final thoughts. At the end of the day, if you learn just the basics of investing, you are 90% of the way to investment success. Once you understand these basics, the fear that you have decreases. That's not to say it will be smooth sailing every day, however. Your nerves will be tested when the market declines, but you have to keep things in perspective. I've lived through 3 wars, 2 stock market bubbles, and 2 recessions, and the stock market is still going strong. During these events, things look scary, but I keep my focus on the long term, knowing that everything will work out in the end. You just listened to part 2 of the post titled The Smart Woman's Guide to Investing Success by Jon Dulin with makingsenseofsense.com. And don't forget, we give away books to random people on our mailing list, but we also give away helpful spreadsheets to optimize your finances. One of them even comes with a free video tutorial, and it's all free and available if you are simply on our weekly newsletter mailing list. To be a part of it, simply come by oldpodcast.com and enter your email address. That's oldpodcast.com. And that's it for episode 465 of Optimal Finance Daily. Thank you all so much for your support and for listening every day, of course. And I'll be back with you for more posts next week. So have a great weekend, and I will catch you on Monday, where your optimal life awaits.